Hello and welcome to Flux News Insights. I'm Lisa Aziz, your host in London for today's exciting show. And joining me for this session live from Singapore are key members of Flux's research team, Research Associates Martha Dowding and Vincent Wu. So today, the team are all set to dissect the latest trends shaping the oil market, as of course the year now comes to an end. With Flux's proprietary financial positioning data, we deliver a view of the oil market that you just won't find anywhere else. We're at the forefront of early trend shifts and can convert them into practical, actionable opportunities. So in the next half an hour or so, we'll cover recent happenings in the market, followed by a positioning review, technical analysis of the oil market, the weather, and a trade idea for the week. So, Martha, Vincent, over to you now in Singapore.
So this week we saw Brent try to rally. It reached 64 and it was sold into really well. We've seen that 50-day moving average is a pretty hard ceiling to any rallies we've seen in the past, looking at probably months now. We've seen next to no net change in the week.
Yeah, exactly. Not much changes in the week. Seems to be a very quiet period leading up to the Christmas season. And It seems like the volume support from the officials confirmed this, Martha?
Yeah, so this was done yesterday. And the average daily traded volumes for the week ending on the 5th. And we can see all of those red arrows, those year-on-year changes. Looking at front month Brent, February is down 14% year-on-year, 15%, 14% in the next couple of months in the front. People are not risk on. We're seeing a bit of risk on attitude in heating oil futures, which is quite interesting because as we said the other day, we've seen these huge swings in the middle distillate complex. But all in all, especially in crude, really, really risk off. And I think that's been really apparent in the price action that we've seen in the past in this week and the past couple of weeks too.
Yeah, no doubt about that. So what are the main market drivers that you've been seeing in the crude market recently?
So the main drivers, I think we're still having this kind of undercurrent of geopolitical news that's driving or not driving the market. I think every time there's kind of a step towards something, I know that Putin came out last week and said, categorically, no, I will fight Europe if that's what they want. And I think that kind of brings a grain of salt to any kind of peace deal we're looking at, because we're always looking at a peace deal from one side. We've seen Zelensky kind of travel the world for his side of the peace deal. But at the end of the day, that's one half of what we need to see. And we're seeing kind of escalations in Venezuela. I know this morning there was some fighter jets in their airspace that was reported. But I think we're going to have to wait to see. We're going to have kind of wait with bated breath to see if we're going to see boots on the ground there. I think that this is a leadership of very big words, and I think we do have room to grow of those words before we see a further military action. I think he's going to have to convince the public a bit of this being a real threat. We've seen more and more headlines coming out of they've been told to say that all of this drug trade through Venezuela, and I think we're going to have a bit more drip fed to us as the public before they would launch boots on the ground attacks. I think they need to have us on side, not us, the public on side for that,
Yeah.
And then lastly, we're set to see a Fed cut today, today being Wednesday. Markets and analysts predicted 25 bp rate cut in December, and the Kalshi odds are about, I always like to check these, 95%, and most major banks agree. So it's a hawkish cut, tighter communication. The dot plot shows little change since September, with only 50 basis points of cuts expected for 2026 and 27. The forward guidance may be downgraded, and a unanimous vote is unlikely. The December cut is priced in, and the Fed is likely to temper 2026 easing expectations. But I think this is kind of, with this all being priced in, as I said, this is kind of being taken on the chin well. Saudi OSPs dropped, and we saw Saudi allocations up from this, which is kind of would have been bad if we didn't see that, more than it being good that we did see it. So I think we're just kind of seeing this kind of trudging on of the narrative. We're seeing the kind of oversupply narrative swing back, and we're due to see a pretty big draw in EIA stocks this week. So I think that'll be something really interesting to keep an eye out on as well, because then you get kind of the commentaries of why are we seeing this? We've got all the oversupply. And I think that further confuses people, and that further pushes people out of wanting to kind of be risk on in this market, I think. But that will be something interesting to look at for sure.
And on the weather side, you've been making some very interesting observations, right? Especially if our viewers in the States might be feeling some colder weather.
Yeah, oh my goodness, I bet they are. Well, I think certain places are. So right now we forecast, couple of weeks ago now that we were going to see this kind of Arctic air spilling over into the States, and we have been seeing that. You can see that today. So this is the 2 meter, so that's the closest ground you're going to get, temperature anomaly. We're looking at some places that are about 30 degrees Fahrenheit less than that average temperature for this time of year, which is hugely consequential, and especially up in the Midwest, which is really important for nat gas demand, rescom demand, so like heating, and also farming demand. I think that's something that we don't often think of when we think of like natural gas, propane, sorry. But we're looking at crops needs drying. That is really needs a lot more energy, or everything needs a lot more energy when it's colder. So this is something that's really been driving sentiment, I think, in a lot of products. We'll come to it later, but in propane, in nat gas, so in LNG, I looked this morning, we had prices very supported and they've sold off a lot. And that's because we're looking at a real swing in temperatures that are forecast. So we're still seeing a bit of coldness in the Midwest, not really, but the country is looking to warm up. So around Christmas, the lead up to Christmas, we're seeing this map turn red. Obviously, the further away a forecast is, the less accurate it is. This is, 300 hours away. So this isn't like a representative of exact temperatures, but it's representative of trend. And we can see that the warm Pacific air is moving in. Sometimes a large dump of Arctic air into the lower 48 causes a negative and floods the country with Pacific air after the air mass leaves. And I think this is a really clear example of that. I think we're going to have a pretty warm Christmas, and I think that's been kind of sold into quite a lot in LNG already. And I think we're going to maybe see that sold into as well in propane, but we'll have a look at that later. And just looking at the polar vortex, looking at this zonal wind, basically, this is looking at how fast, how in control the polar vortex is, how in control the jet stream is, therefore. Think of the polar vortex as a rapidly spinning pocket of cold air high up, sat above the jet stream. When the vortex is strong and stable, it keeps the jet stream tight, flowing smoothly west to east. When the vortex weakens, it's wobbling the steering wheel. We're seeing the cold air dip down into the States, dips down into Europe, and that depends kind of where it comes. The Arctic air spills south and warm air surges north, and then we kind of see that play out, and we're kind of seeing the end of that playing out now. This is forecast to go up. We're seeing it actually go into the higher end of the usual range, which is interesting. We're seeing it really tighten up. We're seeing a steady jet stream, a strong vortex, and a lower chance of that cold air breaking out again, which is really interesting how these things kind of come into be. So this is not the only thing that can cause a cold winter. Of course, we can see normal kind of weather patterns occur, but I think that was a really exciting start to the season, and to kind of see it play out kind of step by step, because there was about a week to 3 weeks between seeing a dip in the zonal mean wind and to see that kind of come to play on planet Earth. So I think we're going to talk about that later with propane, but what's happening in the other products? How are the margins?
Yeah, so on the margin side, we've seen a small decline over the past week across the different regions in the world, Europe, Asia, and the US. On the chart here, we look at the European margins. To your point about the weather, because of the heightened propane demand that we've been seeing because of the colder weather, that could have also led to like stronger heating oil demand too in the
Definitely.
US, perhaps explaining higher than usual heating oil trading volumes, but also perhaps a large contributor to Naphtha strength, especially in the East, MOPJ, the Asian benchmark, because propane competes with Naphtha as a feedstock for crackers. So if propane becomes much more expensive, then Naphtha also becomes more competitive, and therefore demand for that increases. And that's what we've been seeing in Asia as well. And of course, in the derivatives market, the propane flows do contribute to large moves in the Naphtha derivatives market as well. So that's all shows all that interconnection. Something we want to focus on the next slide, you'll see, is what's been driving the changes in the margin, and we like to look at EBOB, the Northwest Europe gasoline benchmark, that has continued its decline over the past couple of weeks, seeing a major correction. As this chart will show, that it's come off from highs, that's a January crack, highs of almost $16, down to around $12.50, which is a support level. Early December, retraced higher, but last week came off once again. And of course, the narrative is narratives are saying that there's refineries have finally responded to these higher cracks, really improving these run rates whereas demand has been has flattened, and refiners are boosting runs. And going forward, market also expecting greater downside risk, especially with the Middle East refineries exiting turnarounds. So that's on the fundamental side, but of course, seasonally it's still very high. Looking at market positioning though, from the Flux's commitment of traders dashboard, we've been seeing unsurprisingly more selling in the Q1 EROB crack, but in Q2 crack, that's net positioning in which this chart shows. We've been seeing some buying over the past week, which has followed a wave of selling throughout November. So this is still in the very short term, but it's showing that there's been more optimism perhaps for the summer cracks. Perhaps people are buying the dip or shorts taking profits. But overall, a contrast between Q1 selling and Q2 buying.
So talking about COTs, how is the wider market looking in terms of positioning?
Yeah, certainly. So on the commitment traders for the futures benchmarks, starting with Brent futures, money managers have added length in the latest data in the week ending 2nd of December. But looking at the wider picture, still very similar pattern over the past 6 weeks. There's been very steady positioning, not so much changes, and that's very reflective of the relatively flat neutral range bound market. There hasn't been many lots of big news driving narratives or shifts in positioning. There's just been lack of major headlines in oil. The next chart we want to look at is the ICE Gasoil futures positioning. So money managers have their net length have declined for the second week in a row, which is very much in line with the recent sell-off in the gas oil market and in the gas oil cracks and the gas oil spreads. The backwardation has narrowed massively. I mean, the key stories have been the reduced geopolitical risk premium from negotiations between Russia and the US, as well as Ukraine as well. All of these renewed headlines have reduced that risk, but also in terms of like the fundamentals too. So Middle Eastern refiners were returning from maintenance that was affecting gasoline, perhaps for distillates as well. Higher run rates, of course, refineries reacting to these higher, very, very high cracks, as well as seeing the fact that imports into Europe from the distillates imports from the US Gulf Coast and the Middle East have reached a 4-month high in November. So all of these mean that people are incentivized to send cargoes to Europe, and that's now pressuring the differentials and the cracks in gas oil. And lastly, in the overall futures positioning, we take a look at Flux Insights CTA positioning index. So currently, the chart with the snapshot shows no extreme positioning, although week-on-week positions have trended to the downside. Of course, gas oil and heating oil positions have normalized, whereas the weakest net positioning is in the RBOB, the US gasoline benchmark, which is trending lower. But otherwise, for crude, it's fairly neutral, slightly skewed to the bearish side. Great, so now looking at a deep dive focusing on the oil swaps market and Flux's very own commitment of traders data. Has there been a contract that has stood out this week, Naphtha?
Yeah, I think this week I wanted to kind of link to the sub we were talking earlier about weather, and you were saying that impacting kind of the heating oil demand in the States. I think we're, of course, seeing that impacting the propane as well, as I mentioned earlier. So this is the front spread. Earlier, a couple of weeks ago, we saw this in contango, which is a real like flashing warning sign about physical demand. Like the prompt demand is not strong. Physical worries, we saw premiums low. We saw it strength relative to WTI, which is also something important to look at. That weakened. And then we've seen a great increase pretty much in tandem with the weather. We've seen this cold weather come in, propane demand increase. And we've seen that reflected in the prices, and people have been buying into that. So just looking at the prices quickly, we've seen this increase to almost 1.25 cents a gallon, which is really strong looking at the week levels, week kind of range bound levels we saw before. We're seeing it quite strong historically as well. Exports are really strong. We see really strong propane exports. We see strong LNG exports as well. And I think it will be really interesting to look at the propane stocks this week, because last week, some of the reason that we saw such a great increase was there was a larger than expected draw in US propane stocks, and it was concentrated in Pad 3. So it's really important to see where the draw is actually happening. So if it's in Pad 3, that's usually a warning sign, because that's the export. That's where we're sending it to Europe from. So looking at the EIA stock release today, that's something to look at. We release those in our data vault as well. If you want to see it kind of broken down for you, put it into kind of where the pads are, whether it's up or down in a year. So we've seen the cold, we've seen the EIA stocks see a decrease, and there was also an impact of slightly weaker freight. Around the world, we've seen all of freight's been really strong recently, for quite a long time actually, but the BLPG1 freight softened a little, which supported the export grades LST. And weaker crude last week as well supported LST. But looking at the contracts itself, on the screen, we can see there's been strong trade house major buying in the outright contracts. This matches really, really high open interest as well, which is always really important to have a look at when you're looking at kind of saturation of the market, whether it's entering that kind of danger zone of like liquidation. And we've also seen really strong buying in the LST FEI ARB. Looking forward, I'm not too sure I can be that much more bullish from here. I think we're kind of seeing levels consolidate now, and I think we're seeing such a high open interest in LST. We're getting a bit risky here. I think I would be kind of looking at consolidation. I know in the technicals of the chart, we're seeing kind of medium-term momentum slow down, looking at MACD, and then a short-term oscillator, which is interesting to look at as well, stochastics. The market got overbought, it's correcting, and we're seeing that reflected in prices because we've seen them kind of level off a little. I think we're going to wait to see some consolidation here. But keep an eye on kind of volatility, intraday volatility of the differential to see if we're going to see kind of a breakout in either direction. We're getting into the range where we're seeing the warm up in temperatures come into the short range forecast, which is when that kind of comes a bit more like known to retail and known to kind of traders that are willing to put a bit more risk on a weather forecast, because you know these weather forecasts, they're sometimes not that reliable, especially far out, and so the closer we get, the more confidence people have to kind of put on those. So that's was my deep dive for the week. I think it's going to be something really interesting to watch. We've seen that kind of strength in international propane, which is kind of petering out. We're seeing that strength in US propane kind of petering out, and also European propane has been really strong as well.
Yeah, certainly, very interesting to watch, especially as the weather changes, going from really abnormally cold to much more warmer temperatures
Quite
in the
abnormally
US.
warm, yeah.
So yeah, definitely one to watch here. Great. Onto the technicals side, with the chart, we're focusing on Brent crude futures. So very much a range-bound price action, although looking at the moving averages, it's ever so skewed to the bearish side, similar with the stochastics. Of course, recently the range-bound nature, prices have fallen within trending within the horizontal channel, with the lower bound $62 and the upper bound $64 per barrel. But the 50-day moving average has been a crucial point of resistance, and the past 2 months have seen prices touch that level 4 times and have consistently failed to break through that. So that is a key area of focus for prices if they want to, if there is to be bullish momentum, then they must surpass that point. Crucially, yesterday prices closed just above the $62 per barrel level, so that is just on top of the lower bound of the horizontal channel, and in the near term, a small bounce might be expected, but looking at the wider picture, there continues to be a price compression between the $62 level and the 50-day moving average, which is moving ever so slower. And also looking at the stochastics, it's also approaching oversold territory in the short term. What this means is that volatility is getting lower and lower and lower. Prices are compressing. It's getting very narrow to trade, very range bound, but still something has to give. So if prices either go above the moving average or fall below the $62 level, then this may trigger spurs of greater volatility. So that's definitely something to watch for. It's almost, you could say, it is the calm before the storm.
We see that kind of self-fulfilling prophecy edge of the technicals now. The more kind of bounces you see from a moving average, the more that moving average kind of acts as a liquidity point as well. So I think that definitely something to keep an eye on. We could see it rise there and then crash down. I think just seeing these levels as kind of key levels. Yeah, so that's kind of how we're feeling about Brent in the technicals. What is our trade idea of the week?
So our trade idea of the week is going long in the Feb 26 Northwest European Naphtha swap spreads. So this trade idea came from the Flux Insights Alpha report, which is a weekly trade idea report leveraging Flux's proprietary data in terms of market positioning, as well as counterparty types, as well as leveraging technicals. And so the idea for this week's trades was a more contrarian one, where the market set up favored a rebound in Northwest Europe and European Naphtha. Previously, I touched on that Eastern Naphtha has been performing fairly strong. However, European Naphtha hasn't been able to follow through because of weakness in gasoline blending, etc. But the spread was weaker on fairly weak outer seasonal level, as well as that Q1 is typically the strongest time for naphtha in terms of demand. So if there were to be a reversal, then there would be good risk reward going along on the spread, especially as the fly, which is the difference between two spreads, in this case January, February and February, March, that was negative around minus 50 cents. So if that corrected, then of course there would be good risk reward for spreads in terms of a long position. So we targeted a price of $4.25 per metric ton, which is around the level that the spread reached before the recent decline. And overall, the trade has performed well so far. That was owing to strength in better naphtha buying in the window this week. So yep, that was the justification of the trade, as in expecting a bullish reversal, and it is on track to reach that target.
Yeah, great. But looking kind of more broadly, coming into the end of the year, as you said, how do you see Brent? Where do you see Brent ending the year?
I see Brent's ending above $60, at least by the end of the year. Currently, the market is very much in an equilibrium. There's a lot of market fatigue. Going one way or the other. There's a lot of geopolitical uncertainty, as well as in the macro environment surrounding the interest rates and how much the Feds will be cutting rates in the year ahead. So overall, a lot of uncertainty, and also options volatility has really died down over the past couple of weeks as well. The market seems to be very much more fatigued compared to the start of the year, when it was very much event and headline driven, especially by Trump's Truth Social posts. But sentiment has been completely flipped later in the year. So overall, I think towards the end of this year, I don't expect a huge event to happen. Of course, we could be proven wrong, but in the next year, the key thing I'll be looking out for is progress in peace negotiations to end the war in Ukraine. Because currently there are negotiations, there are headlines happening, but that's been more symbolic than real progress.
Yeah, I think it's almost like it needs to be more than progress. It needs to be like a document on the table, because I think we see these headlines and people are almost not selling into it anymore. I know the officials did a poll on their Twitter the other day, like how much would it even come off now? And I think the majority voted like $0 to $5. I think that obviously that's just what sentiment's saying, but I think it's interesting people are skeptical. Like, I think everyone's got such an agenda with the war that I for one anyway, I'll sell when the document's on the table.
Yeah.
But yeah, I mean, it's hard not to be bearish. The US didn't release their PPI the other day because probably wasn't very good. And we're seeing these kind of delays. So when people do see some data, it is kind of acting a bit like a liquidity event. I think we're seeing people kind of check out of the market, liquidity is dropping, OI is dropping. And I think it is important to kind of keep an eye on those kind of key levels as kind of liquidity touch points as to whether people will be buying or selling there. I mean, I like to think we might get a bit closer to 60, just because that's the kind of the trend, if you can call it that, barely a trend, is kind of picking up a little. But I think, yeah, I don't see any, there's nothing to suggest a reversal. Obviously, there are these like black swan events, but I think right now it would be hard to forecast a reversal outside of something very unfortunate geopolitically.
Yeah, for sure. I completely agree with that.
And that's it for this week's Flux Insights show. Hope you've enjoyed it and learned a lot. I know I certainly have. Huge thanks, of course, to our fabulous research team out in Singapore, Martha and Vincent. And remember, for a deeper dive into our research and data offerings, you can visit flux.live and feel free to reach out to us with any questions and comments. We will see you next year.